3, 2, 1. We are recording. Welcome, everyone. It is G Money. Everything you're real. Ugh. I totally messed that up from the get-go.
I thought there were no takes.
Yeah, there is no takes. All right. On 3, 2, 1. All right. Welcome, everyone. Today we have G Money, Real Talk, everything mortgages and real estate. And we are live here with an escrow officer, Diana Wyatt from Stewart Title. Welcome, Diana.
Thank you.
And I want to give you a little history, just some personal history about myself. And then we're going to go through the escrow process. What is escrow? Why do we need it? Yes, it's one of your closing costs. So we're going to kind of dive all into that. But going way back into my history, way back prior to doing lending, I may have been 14 years old working in a warehouse for Stewart Title because my father was a district sales manager for Stewart Title. And nothing in life is for free. And I learned that real quick, that if I wanted things, I needed to work. So I asked my dad if I could work and went to the good old school and got my work permit and worked in their warehouse with no air conditioning in the good old Central Valley. It was very laborious, moving, shuffling files. It was terrible, to be honest. But that was my introduction to Stewart Title. And then as my dad promoted through the company, we had the opportunity to fly out to Houston, Texas, where Stewart Title is from. And I got to meet Stuart Morris prior to his passing and kind of the history of Stewart Title. So I have a real long-time connection with Stewart Title. And that kind of leads me today. I've got, again, Diana Wyatt. She's an escrow officer with Stewart Title. And we just closed our first escrow together. And we both kind of finished up and said, wow, that went smooth. I like you. I like the way you work. And it kind of went both ways. And so as she reached out of, just, hey, here's kind of who we are, I said, you know what? You're going to come on and do a podcast. And I don't know if I gave you a question mark in there or just kind of an exclamation, but here she is. So let's, Diana, I want to hear from you. Let's kind of get your history of how did you get into the escrow world, and tell us as much or a little about yourself as you want to share.
Well, I've been in escrow for 25 years. Started with Remax as a receptionist and then was offered a job in escrow and thought, no, I'm going to stay as a receptionist. And then I got bored doing that, so I went to escrow.
the money climb, right? A little incentive.
A little, yeah.
Yes.
And then learned escrow by fire because at that time we were busy. You just threw everything in and made it happen.
Yeah.
Went from Remax to Southland Title to Lawyers Title and Title 365 and Berkshire Hathaway in-house. Then to Stewart.
Okay. And then, so how long roughly have you been at Stewart Title?
Stewart, 5 years under the Stewart name, but I was with Title 365 for 8 or 9 years before Stewart bought them out. So
okay, gotcha. So why don't we kind of elaborate what is escrow? The word escrow, and this is kind of what I always, as I sit down with my clients and I give a presentation and walk them through the steps, it's, I don't want to say confusing, but the word escrow is used many times throughout the process. It's an escrow company, and then there's escrows or the impound account, right? That can also be used as escrow. So with what you do, can you please share, kind of get detailed here of, what is the escrow and escrow process?
Well, when I was first in escrow, the first thing that they explained it to me was just go back into the wild, wild west days, where one person had to go on a cattle drive. He was selling a piece of property, handed the deed to that property to the pastor or somebody and said, hey, when this guy comes in, he's going to give you money, you give him to the deed. And that kind of created the very first escrow officer.
Okay.
A neutral third party.
Right.
That handles, on real estate transactions where the neutral third party handling the differences between the buyer and the seller, the real estate agents, the loan officers, kind of gathering everything together so that way at the end of the process, no one person has control. It's all funneled through us to go through and make it all legal and comfortable.
Yes. So your analogy is a lot better than mine. You paint the Wild West, which I think Stewart Title's history, they probably schooled you somewhere on that, because in Texas, that's definitely how it was at one point. I always just say, the escrow is the middleman to protect all parties. And if we didn't have escrow and you handed your money directly to the seller, they'd be in Hawaii on your dime and you would never receive the property.
Yep.
Yeah. So it again, that's what they do, is they're the middleman to act as the fiduciary, that they're not going to close escrow until all of the terms of the legal purchase contract are met. And you disperse funds, money comes in, money comes out. Maybe share a little bit of that. Like, you work for both the buyer and the seller.
We do. When a file opens on a real estate transaction, the first thing we do is collect the deposit money from the buyer. If there is any, stating that, yes, we want to buy this property, here's our proof of the fact that we want to go through with it.
Yes.
We hold that. Once we have that, we look at the terms of the purchase contract, draw up our own version of the instructions that include the regulatory rules that we have.
Yep.
And then send those out to both buyer and seller for signature. Escrow can only do what we are instructed to do. We can't just arbitrarily, willy-nilly decide, we're going to go do this. If the buyer and seller do not mutually agree, we're sitting on our hands. We can't do anything.
Correct.
And then throughout the transaction, one of the main things we do is clear title. We have to make sure that when the buyer takes possession of that property, there's no liens, open taxes, loans, et cetera, on the property. So we order payoff demands. Sometimes we'll order termite reports, home warranties. We're technically not supposed to, because we don't know the property.
Yeah.
And then at the end of the transaction, we work with the loan to get the buyer to sign the loan documents, get the cash from the lender, and then the next day we record at the county recorder's office and transfer ownership to the buyer, and at the same time pay off all the debts from the seller and give the seller hopefully the proceeds.
Yeah. Now, going through that process, and some of the components that you brought up is also title related. And I kind of want to bring this up because it sounds like from your resume here, most, if not all, of the companies that you worked for, they have escrow division as well as a title division, and they do go hand in hand. And you brought up the process that, through escrow of clearing this, part of the requirements through the purchase contract, but also if you're doing a loan, it's required that you have lender's title insurance, at least. That title insurance is part of this process. And to assure that there's no clouds on the title, you brought up search liens, the chain of title, etc. And how do you feel it really, and I see this, it's very beneficial to have in-house title as well as escrow? I mean, do you want to kind of chat with that, of how it is working with your title officers and what issues can and do arise?
Sure. I mean, either way, whether you're an in-house escrow or in-house meaning title is part of your same company, or whether you're an independent or whether you're a real estate company escrow, you still have to make sure that the report that they give you for the chain of title, the preliminary title report, is clear when you transfer ownership, or even if you do a refinance, that everything's in the right order.
Yes.
Part of cleaning that up is if there's, like, say, if there's a lien, but it's 40-something years old, for a fact that the previous owner had it, the previous owner is no longer with the property. Being in-house title, we can kind of go to our title officer and say, hey, here's the deal, look at these paperwork, here's what we can provide you because we have the same search engines they do, and we can hand it to them and have it cleared. Mm-hmm. Where if you're an outside, you still have to do those steps, but it's a little easier in-house to just be able to walk back to the back room and say, clear this, as opposed to waiting for them to
be able to review it together and have those connections, those relationships, that under one umbrella, you guys are kind of a package of protecting the company. And, I've had, what can come up on some of these title searches. I mean, I'm going to name a few that I'm aware of, but like child support is one, old liens, judgments. Even when you guys are out there doing your quit claim deeds, which you don't do that when you're doing that by yourself. a lot of times, because that's uninsured, it's completed without title insurance and an escrow company. A lot of times they want you to recertify those, and you'll need to re-sign them. Is that correct? Do you see a lot of that?
Yeah, I mean, some of the weirder things we see in what you're talking about right now, we considered an unsecured deed.
Okay.
And so we would have the person who signed off, the grantor, sign another document called an uninsured deed affidavit that just says, yes, we signed this off. It wasn't a forgery. It wasn't something.
Right. But you're having them do that,
Yes.
which is a follow-up in an assurance, because what title is issuing is actually insurance. And I think we haven't got there yet, but in title, in this episode, I know we're going to speak a lot about title. It's more escrow, but it works together. Title issues an insurance policy. So if there's an old claim against the property that title didn't catch, then they can come back, and that's why you have title insurance, is to pay that claim out and to clear it, correct?
Right. Well, for instance, I have a transaction right now we had a claim listed against it because we did a transaction for refinance, recorded it, while at the same time the borrower had taken out another loan with another title company.
Oh my goodness.
So before we record, we always do what's called a data trace on the last thing. Well, the county recorder's office is 2 weeks behind making things public record.
Okay.
So, now we have two first loans and each party only knows about the one they're doing. So
Wow.
that's kind of the
Now-
stuff that we're trying to clear and make sure isn't a problem.
Yeah, I'm interested in your example. Thank you for sharing. Was this kind of malicious intent on the borrower, or they were just very naive to do multiple transactions in such a short time?
I think it might have been a little negligence in knowing, because one was done as a corporation, one was done as an individual.
Okay.
So I think that was part of them not really knowing, which is one of the reasons why it's important to have an escrow and title and people who know what's going on, because there's so many things that you wouldn't think about that we have to clear. And if you have an equity line and you pay it off, well, even if it's paid off and reconveyed, we still have to make sure it was paid off, because years ago,
Yes.
Bank of America, somebody was in there just arbitrarily writing out reconveyances, and then would come back to the title company saying, hey, this was never paid. Now you owe us $200,000 or whatever because you put a new loan on behind it.
Right. And I see that frequently with equity lines where and what she's suggesting, I'm just kind of clarifying here, is for every transaction that you do that you see on the preliminary title report, a title search, that there was financing. So an equity line with B of A, you order a demand. A request for demand says how much is owed. Even if that number is zero, they still order a demand to assure that there's no balance and that they can clear and remove that. And to remove it, she brought up the word reconveyance, whereas that lender reconveys or pulls back their interest in the title. And all of those steps need to be done. And even with equity lines, not only do they want to assure that it's a zero balance, but it's freeze and close it, because a line of credit is a line of credit where you can actually have a zero balance today, and tomorrow you can go deposit a check for $100,000 and draw on your line amount. So these steps are normal, and I'm kind of bringing up some very common transactions and things that we do see. Yeah.
Some of the things people want to really pay attention to, and like say through escrow, we have to kind of guide them through, are cleaning the title up.
Yeah.
Because ultimately that's the hardest thing. That's the scariest thing for somebody. Like all of a sudden there's a lien on their property and that's not mine. Well, you're right.
Yes.
The problem is liens come on properties, not just directly against the property, but against the person's social
Right.
or a person's name. And
Yes.
so if you have a name that's common, we're having to ask you for, we want your social security number, we want your driver's license, so that way we can clear it and make sure that this person isn't actually you, or that somebody doesn't have a lien on their property that they shouldn't have.
And with that, we do that through the SI, or Statement of Information. Can you share what that is and when you like to do that?
The statement of information it's a form that asks for that information, the information that we would use to kind of make sure that the property is clean and that liens and such are not the person that we're dealing with, the actual owner. Ultimately, we would like that form first and foremost, because
Yeah.
then we can clear it. throughout the transaction, we'll clear title. So if we get the statement of information at the very beginning, we run it against the prelim to make sure that the loans, any liens are actually the borrower or the current owner or seller. And then if they're not, we do whatever we need to get that off the property. But then we also run it again right before close of escrow, because you never know. Somebody might put the property on there. If you're refinancing because I'm going to redo my kitchen, well, now we have the possibility of a mechanics lien, because somebody can go and say that we started the work, we have to have a mechanics lien, and then you have to have the actual contractor sign a form, you have to have the seller sign a form. So throughout the transaction, we are constantly checking to make sure that the property is going to be in clear position when we close escrow.
Yeah. And a couple things here. One, she brought up mechanics lien. It's not like we're having, oil changes on your house. A mechanics lien is for contractors whereas when they start work, they put a mechanics lien, meaning they're going to do repairs or work on your home. They're going to make this public record, because in case they are not paid or something occurs, they have a vested interest to recoup what they can. Very common with like roofers. I see that, very commonly. And also the scope of your project. I mean, if you're doing $20,000 worth of repairs, is it worth the filing fees and the extra efforts? Not necessarily. When you're doing a full remodel, $200,000, $300,000, $400,000, you can bet that contractor is going to do that. So the liens are vital. The other part with this is, the statement of information. They're asking information that goes back 10 years. What are your previous addresses? What's your middle name? When did you get married and where? They're not trying to be invasive. They're trying to eliminate potential red flags and do that early enough. And when you have a common name, Jason Garcia, and that's my stepbrother. Shout out to you, Jason. You have a common name, and I hate to say it, but I'm going to say 10 million Jason Garcias. Now, what if we threw out the Jason Garcia Jr., and I'm sure you see this, as a lender with the suffix junior, senior, the third, these are things that get really tricky. And so the more information that they have, middle names, middle initials, they can differentiate whether or not, yes, this is your lien or not. A good little personal story is way back in the day before I was married and even thought about children, I got a wage garnishment. My employer calls me up, American Pacific, and they said, "Hey, we're going to garnish your wages." And I said, "For what?" And they were like, "We just got a request for child support." And I was like, "You've got to be, I don't have a kid." So they were like, "Well, here's a copy of it. We have to garnish you." So I call good old Sacramento, state of California. And so I'm explaining to the lady, I go, "Lady, I'm sorry. I don't know how to clear this up, but I don't have, any children. And, sir, do you know how many times a day I hear that it's not my kid?" I said, touche. So good on you. And, ultimately I had to fax documentation, including my photo ID. And to get to the bottom of it, somebody had the same Gregory J. Abrams, and they had just moved from, I believe, Texas into California. And their social was so close to mine that they just went after that. And they tried to grab or garnish my wages. And ultimately, it's a funny story to look back at now. I have 2 beautiful twins with my wife, no child support. But even if I did have child support, that was not mine. And I had to prove that it wasn't mine. But those are things that do come up and can hinder you getting on title or getting off title, because if there is child support or back child support, Diana, am I correct? You cannot close escrow without having that satisfied, correct?
Correct. I mean, that's, as much as escrow, like I say, is a neutral third party, the majority of our daily work is clearing items from title, whether it's the seller, the buyer, anybody. I mean, unfortunately, you could have been married and divorced 20 years ago, and all of a sudden your ex-husband or ex-wife has an IRS lien on there. If the IRS put that lien on the property before the divorce was finalized and before you got off title, that you're still responsible for that. Okay. So we spend a lot of time doing that. The hindrance is that Escrow is a neutral third party. We cannot advocate for either side. So we have
Right.
to say, I'm sorry, but you have to get this information to them directly. We'll do what we can on our end, but honestly, our hands are tied for a lot of this because we're neutral.
And that's how it should be. I mean, I feel like to be unbiased, you really, you need to provide as much information as you can, share how to clear it, but ultimately it's their responsibility to do that. And so, yeah, that's definitely part of it. Now, Stewart Title, I know them as a large company. What is their footprint and reach across the nation? Do they lend in all states, all 50, the continuous 48? Where do you know?
We're actually worldwide.
Okay.
Yeah.
Worldwide.
We have, down in Mexico, we have some in Europe. So we're kind of worldwide. We have, if it's not directly called Stewart, we do have something in every state. I mean, some
Okay.
states are table funding states, which means that they don't have escrow necessarily. They use attorneys more.
Yeah, that's where I was going. So you beat me to it. Yes.
But we're still, if we don't own a direct Stewart operation, we still have our hands in attorney offices that work on title. And so we're kind of everywhere.
Yeah.
And we have a national desk, so.
And then with your personal reach, are you able to do transactions in other states, or are you just limited to a certain region yourself?
I'm limited to the state of California.
Okay.
So
But you also do loans in Northern California, Sacramento, Bay
Yeah.
Area. Okay,
Yeah.
gotcha. And really where I'm going with this is, as a lender, I have to disclose fees to the consumer, rightfully so. Well, I have to do that for all parties and specifically for my client of what to expect in terms of cash to close, and whether it's my lender fee or Diana's escrow and title insurance fees, I have to have a reasonable quote, and there's parameters that some have zero tolerance, some have a 10% tolerance. And so I can't just throw a quote together and say, oh, good luck, and for my client's sake, I quote very accurately. I also quote very conservatively, that when we get to the finish line, I quoted you this in the beginning and it was that or better. And it's always that case. I don't want to work of, hey, I did a teaser rate and fees to get you in the door and things change. That's not how it works. And so one, as a side note here, going with a good lender, the integrity of the fees that they're quoting you. And this is where I'm saying, have valid references that maybe have worked with that escrow or that lender of what was the setup expectation versus the reality, because not all lenders are equal. And that's something to be said that, unfortunately, there are some that they just look at the total amount. And this includes people. They only look at interest rate. They don't look at the total payment and where are things hidden and not hidden. I will always give you my 100% honest opinion. I will give you the honest facts. Again, this is why I named this Real Talk. Is I'm not here to blow smoke. There's enough business for everybody out there that wants to do loans, that I just want to be a viable resource that has good reputation and strong integrity, that when you come to me, again, whether I'm doing your loan or not, that you're going to get the real facts. So sorry going off on my little tangent here, but it's something that is very important, that as we're competing yet comparing, it's good to know where I can compete within my own fees. But when I'm providing you an accurate title and escrow fee, know that it's accurate. It's and that means a lot. So
Well, that becomes difficult too, if we're going on a tangent.
Yeah,
It's
yeah.
kind of one of my pet peeves because of the new federal regulations and such. You have to disclose fees in 3 days or something like that?
yes, we do.
Well, a lot of times we don't really start the escrow process. When we get the purchase contract on a Thursday, we don't get the earnest deposit until Monday.
Yeah.
At that point, now we're starting to order the reports that you have to go along with it, the inspection reports as far as the natural hazard disclosure, the home warranty. So there's a lot of times where we don't even know the accurate fees, or if there's a homeowners association or solar, there's additional fees that are going to pop up on the buyer side, and we don't know about them until days after.
Yeah, no, thank you. And this is true, and this is the challenge. And I think my experience has only benefited of me being conscientious of that. Well, first and foremost, as a consumer, I've bought homes from an early age, and so it was one of those that every single dollar made a difference. And so the sooner we can get that information to you and it be accurate, the better. And so this is one of the other things that I was going into is, let's just talk about a purchase contract. In California, oral contracts are legal and can be binding. Specifically with real estate, it has to be in writing. And that's because there's so many disagreements, right? And so I'm not saying even having it in writing eliminates that, but it sets the expectation. It has print where there is a definitive, and if you don't agree with that, there's arbitration, then you can get lawyers involved. You don't want to get to that. But at the same time, where I'm going with this is I look at an RPA, residential purchase agreement, which Diana follows as an escrow agent. She's saying she cannot close this transaction until all of the terms are met. And so there's check boxes of time windows of when we're supposed to close escrow. There's dollar amounts. There's who pays what. And so kind of where I was totally going with this is, even though her and I both lend throughout the state of California, there is different customary practices in different regions. And I'm going to give an example here is, I grew up in Modesto and Stanislaus County. It follows suit the same as Ventura County. And so what does that mean is escrow, the process is mutually beneficial between both the buyer and the seller. And so that fee is split 50-50. Now, you have title insurance, and there's two different types of title insurance, and I'll probably have you comment here in a little bit on owner's policy versus lender's policy, but the owner's policy is the more expensive premium that's based upon the sales price, and then the lender's policy goes to cover and protect the lender, right? So that, and you wouldn't have that fee or that policy if you didn't have a loan, and so for that reason, the borrower pays that. And then if you purchase both title policies simultaneously, obviously there's a discount. Well, in Ventura County, Stanislaus County, escrow is mutually beneficial. So that's paid 50-50 between the buyer and the seller. The owner's policy is paid for by the seller. That's based upon the sales price. The lender's policy is paid for by the buyer. And then we have county transfer tax, which is customarily paid for by the seller. The transfer tax is $1.10 per thousand. So again, it's based upon the sales price. But then we have lovely cities like Los Angeles. Diana, tell me about the city transfer tax.
They just redid it again. But Los Angeles City is $4.55 per thousand.
Oh, so it went up to $4.55?
Well, it's been $4.55 if you're in Los Angeles City proper.
Okay.
But then they just did the mansion tax also.
Oh, correct. Yes.
So that varies on sales price. And that.
Yeah. So essentially, you're hearing that where the property is located can have different fees. The confusing thing, I'll even get into Los Angeles, I'll pick on LA for a little minute, is there is probably, 30, 40 cities that are the city of Los Angeles, and it's the Brea area. Yes. Like they want to claim it, they want the revenue, they want to be able to charge their tax. And although you're driving through the city and it says, welcome to Brea, welcome to, Winnetka, like Silmar, it is truly the city of Los Angeles, and it's that area. They locate them as areas. So a little fun fact for you guys. So when we go to do our loans, the way that the address may read is Los Angeles, and then they'll do little brackets of the area, and I don't know. It's confusing and silly, and it's a LA thing.
Well, that's another issue. When you do the address, a lot of times the appraisers will use the UPS site address.
Yes.
As opposed to the actual legal address that's attached to the tax number.
Yes.
So that becomes a problem too, because then all of a sudden, we need an amendment stating that it's the city of this, and it's like, well, it's really not actually.
And then us as a lender, we want everything to match. We request a closing protection letter. We have the appraisal. We have our loan documents. We have the escrow instructions. We have all these things that have to match the address, and and it's for a reason, and I understand that. So again, kind of getting a little sidewinded, but just kind of showing you that different cities have different fees that are allocated. Now, are you familiar with Sacramento's fee allocation?
I haven't done a sale in Sacramento recently, but I know last time, with like the Oakland area does too. They have
Seller pays it all.
Yeah.
Seller pays it all. Now, imagine, misquoting, or, in that case, it would probably be beneficial as the buyer. But if you're setting up a seller's estimate or something like that, and so again, kind of diving deeper into this, as I pre-approve somebody to go shopping for a home, I base my initial estimates and fee expectations based upon here's the customary fees for this area. Now, just because they're customary does not mean that that's how that purchase contract is going to come out. And so the very minute I get that purchase contract, I have to read it to make sure, did they go customary? Because everything in real estate is negotiable. You want the furniture in the house, you want the barbecue to be left. I mean, put it in writing and we can get it done. But it's one of those that is very critical, that even though it's customary, we have to see how your contract is written up to decide who's paying it and how much it is, because that's going to impact your bottom line.
Well, I think a lot of the customary fees also they coincide with the ramifications that follow.
Okay.
Like Ventura County I guess not recently, but if you have furniture within it and there's a price tag on that furniture,
Yeah.
your tax bracket's based on that sales price and that furniture.
Right. And that's why, I've always seen, if it includes furniture, it's at no value. Right. They purposely give it no value so to avoid those taxes. Yeah. Good point. As escrow, again, we're primarily talking about a purchase transaction, and what are all the transactions purchase, refinance, but what can you escrow? Is it just single family residence? Is it mobile homes? Give me a list. I don't need to have them all, but
everything can kind of be escrowed. I mean, you have timeshares that are escrowed.
Oh, okay.
Granted, most title companies don't handle that. That's normally through an independent escrow, but you do REOs, which are bank-owned properties that are selling. That's escrowed. You have bulk sales where you're actually selling a business and its content. That's escrowed. Mm-hmm. Mobile homes, condos. You can do water well leases. Pretty much, if it has a deed to it of some sort, you can escrow it and go through all the different comments. I mean, there's a lot of different jewelry.
Wow.
I mean, everything can go through escrow companies.
I love it. I'm learning some things I didn't even know. So I like that. If it has a deed, then escrow is what you want to use. And again, it protects both parties. It's the PayPal of real estate, right? So and that's not if you do it as the free to family. It's not the friends and family rate. It's the buying it. The PayPal is the gifts, the services or purchases. So that way you're protected. You do commercial.
I personally can do mobile home, commercial, residential, Bureau of Indian Land leases, kind of everything. I don't do bulk sales because that's there's a lot of liability on the actual escrow officer as an individual on those, where most title companies won't let you just because it's now their employees under the government as opposed to them.
Okay. New construction.
Yeah.
Okay.
New construction, bridge loans.
And we do bridge loans, we do construction loans, we do all of that. 1031. Why don't you maybe chat with? I'm sure you do 1031 exchanges. Explain what a 1031 exchange is and how that impacts you and just overall. Yeah.
1031s are something we're actually starting to see a lot of right now. 1031 is if you are an investor property or you own investment property. It can be a commercial, it can be residential. If you want to avoid, I guess I should backtrack. Anytime you sell property, there's a really good chance that you're going to have a real estate withholding tax on it. Mm-hmm. When you sell your personal property, as long as it's been your primary residence for 3 out of 5 years, you're generally exempt from that. But investment properties, you definitely will have the withholding. So as a workaround, there's where you basically act as you have an intermediary company, a 1031 exchange company, and they at the very end act as a seller. The seller is going to be signing all the paperwork, escrow paperwork, purchase contracts, but at the very end, you have this other company that comes in and says, okay, I'm the seller now. And then the proceeds from the sale get sent to that 1031 company. The 1031 company then now works with the seller, who on the reverse side is now becoming a buyer. They can use those funds to buy a like property. If you have a $2 million sale, you can buy two like properties. But if you have an apartment building, you can't break that down and then go buy it residential for your own residence. You can buy more investment properties with it, but you can't use the money for your own personal gains. If you don't use all of the money, you'll get taxed on what's called a boot.
Okay.
And so the government will just tax you on that particular portion. But a lot of people right now are using the 1031s just because of the market.
Yeah.
They want to get out of wherever area they are and reinvest in another area. So they're using the 1031s to avoid any kind of real estate tax.
Yeah, no, that was good. And I learned some info on the boot there that I did not know about. So intermediary, working with intermediary, we're not trying to confuse you, but it's, basically keeping the money out of the seller's pockets so that he doesn't have to pay capital gains. And so as long as they roll it over, then like she said, it avoids the taxes or a portion of it if you don't use it all. Now, I had a client the other day I was speaking with, and they were asking, I know I've seen the California withholding form, and they withhold 3 1/3 of the sales price if you sell an investment property, no matter what, right? Is that kind of the case? You can say you want to go exempt and then you leave it up to the client, but for the most part, it's 3 1/3 of the sales price.
3 1/3 or 12.3 of the net.
Okay.
That just depends. It's one of those forms of, throughout the history of escrow, the government likes to, here, you're now in charge of this. So we're in charge of
money grab, right?
Yeah.
Because I remember, earlier in my career where there was a lot of people getting into flips, 2002 to 2005, 2006. And, obviously if there's money to be made, they would try to go after it. And I remember there was so many new construction homes out there in Modesto, and you'd go put $5,000 down, and by the time it was built, you made $50,000. And I had a ton of friends that would do that, and then they would sell it, and then it comes time for your personal income taxes, and you've spent the money. Right. You went to Vegas, or you bought that new car, or whatever you wanted to do. And so I think what they're trying to do is throw it in there in the ring, that little IOU, to capture it before the money is spent. The question I got though was like, and I don't know if you do know this or not, but let's say you purchase a home, an investment property exclusively, for $500,000, and you sell it for $700,000. So we've got potentially $200,000 of capital gains basis. That's not how much you'd pay, but it's taxed on the $200,000 profit. If you put in $100,000 to improve it, and you can document that, is it just the $100,000 that you're cap gained on? Do you know that?
As far as the form, the way the form's written, yes, that would be what it is. But
okay.
I mean, obviously.
And that's also a CPA question.
Exactly. We're not.
I'm more curious about the forms of what you deal with directly. Of do they have that annotation on there where you can specify, so you're not just off the top just taxed?
Yeah, I mean, there's a couple of different ways. Like I say, if it's an investment property, page 2 of the 593 form actually asks you, did you take a loss, and ask you to basically, it's a calculation form where you can figure out what your loss is. At that point, you have on the page 3, you have an option of doing the 3 1/3, like say of the whole gross sales price, or you can do 12.3 of the net. Okay. So in that situation, if it were me, I'd be like, oh, well, I only have $100,000 net, so let's do this on the net as opposed to taking the 3 1/3.
Right. 9
times out of 10, from what I've heard, most people get that money back.
Yeah.
It's just, like you say, it's a holding for them.
Exactly, and that's where I was saying they're just trying to money grab some share before all the money's gone. So we've kind of chatted about the fees. I have that here as escrow split, lender's policy is on the buyer's side. Other common little fees that I see is like title endorsements. I know them as like the environmental or condo. Can you speak? I don't have the greatest explanation on endorsements. It's additional title insurance coverage based upon specific property types. Is that kind of it?
Property types and different lender requirements. Not even like lender, like if you're doing a commercial, construction loan, as they take a draw out for each time they get paid for that, construction,
Yeah.
you do another endorsement. And the endorsement at that point, like on the construction, is based on, okay, your whole loan is $1.2 million, but you're only withdrawing $200,000 at the beginning. So we're only going to cover the money that's actually been out there.
Okay.
So each time you take more, you get another endorsement, another endorsement, another endorsement.
Gotcha.
But endorsements they can be environmental, they can be water, there's a solar. A lot of commercial lender want, if you have a spouse, but the spouse isn't actually on title, they've already signed off their California interest to the property,
Sure.
they still want an endorsement that says the wife or husband has no ownership, even though there's already, like say, an interspousal grant deed out there signing
Yeah.
off their 50%
So
common
weird.
interest.
And in California, they have rights anyways if you acquired it
Right?
during marriage. So, whatever they want, they do it. Other common fees, loan service. What I've seen over the years, it used to be you had a wire fee, you had a courier fee, you had an overnight fee, you had a transbox fee back in the day. All these different fees. What they would do is just, and now kind of modern, I like it where they just kind of bulk it together. And it's a miscellaneous fee, yet it does go to cover these specific coverages. It's just one fee, not trying to like necessarily nickel and dime you to death. So the loan service, and then recording fees are things that we commonly see. You're going to record. What is recording? Why don't you talk about that recording? What do we record and why?
Anything and everything gets recorded.
Yeah.
I mean, on a real estate, we'll just say a sale. On a sale transaction, you're going to record at least one grant deed, which is kind of the pink slip to the house.
Yep.
Signed by the seller in front of a notary. That gets recorded into the new buyer's name. And then if there's a loan involved, you're going to have a deed of trust
Yep.
being recorded. If there's, trying to think of all the different things.
Interspousal deeds
Yeah,
common
interspousal.
in between, and that's kind of what you were just talking about. Whereas one party is going on title and the loan, and the other spouse is signing off. They have to sign off on it. Not only the interspousal, but probably some escrow instructions for you.
And then in like a refinance transaction, again, you can have where you're changing vesting. So you could have a grant deed, you'll have the deed of trust, you'll have potentially release documents for the loans that you're paying off. If there's a solar company on there, a lot of times they'll do what's called a UCC filing. So you have to record the UCC3 release. And all these things get charged, and it depends. The charges really depend on something as stupid as the size of paper.
Yep. How many pages?
How many pages?
$14 first page, $3 each additional, right?
And then with the SB2 civil code charges, you also get $75 per document. The problem where it comes up with that is some of the wordings on deeds of trust, if it talks about assignments or rents, look at that. That's technically supposed to be its own separate document. So now you're getting charged that $75
Oh, wow.
again.
Okay.
And that gets kind of sketchy in the commercials
Yeah.
because there's more of that verbiage in a deed of trust. They just kind of lump it all into one document as opposed to multiple documents. But that gets recorded at the county recorder's office, and then they'll give us an instrument number and
Yeah.
give us charges. Sometimes, we're not going to know these fees right
Yeah.
off the get-go. So when you're doing your estimate, we're trying to estimate too, like, okay, on a standard transaction, this is what we're having. And then all of a sudden we get into it, and now we have
Yeah.
4 other people that are being added on title, and they're all spouses, and we have to get interspousals, which create more. So
Right. Normally on my end, I try to account for $50 for a grant deed, $50 for an interspousal, and then $150 for a deed of trust. And that's if it's a primary residence. And if it's an investment property, then I account for obviously more because the assignment of rents and any other riders that I foresee. I mean, if it's a VA rider, condo rider, obviously I try to overinflate. Again, I want to make a conservative estimate that, on my estimate, it shows $250 to $350 of recording charges. When it's all said and done, it comes out to $147, Well, now we've just kind of beat our estimate, and then you get that money back if you've brought that into escrow. So you're not paying for anything you didn't earn. But if you're $1 short, we're not closing escrow until you have that money. And so it's better to be conservative and just kind of, make sure that we've accounted or over accounted for something versus not at all.
And one of the things you want to make sure that you're looking for on the recording docs is the mail to or mail back to.
Yes.
I mean, obviously on the deeds of trust, it goes back to the lender until it's paid off, and then the borrower gets the original. But like on the grant deeds, if we don't know it's owner occupied versus non-owner occupied, which generally we don't until we have loan docs,
Yeah.
we just automatically are putting the property address. Well, now we're sending it, and all your tenants are like, "What's going on?"
Yeah.
So just make sure that parties really want to make sure that we have the correct forwarding addresses, because otherwise documents are getting, like I say, they're getting sent all over the place, and 9 times out of 10 might not want them to go where they're going.
And that's not just for you. That mail to address is for the county tax assessor and collector. And so, if those property taxes go unpaid even one day, there is very steep fines and penalties for that. So you want to make sure that you obviously have a good mailing address. If you don't have, or it's unknown for a while, get a P.O. box. I mean, I still to this day have a P.O. box for, privacy and security. It's nice to have. And then everything I own goes to that P.O. box. It saves a hassle down the road of change of address, right? And then,
Exactly.
yeah. Speak with me a little bit on the notary, and I get this all the time. And, I try to be at my loan signings as much as possible. And they're like, I'll talk to a client. They're like, "Oh, I'll get my own notary." And I'm like, no, we can't do that. Yeah.
Most title companies have to have a notary that is approved by us. We go
Yes.
through all their verifications, make sure that they've done notary signings before, because each document's different. Where a notary legally can't go over the loan documents and talk to you about the terms as far as whether this is good or bad. They are supposed to know what each document is, what the general idea is behind each document. So we require that they're signing service agents.
Yes.
So they know what they're going over. If you just go and get, your Aunt Bertha, who's only ever signed a grant deed with one signature, and you have under 100-something pages,
Yeah.
we don't know. And then also, liability,
The liability, right?
which is scary. There's some things, like different states right now are allowing it so where you don't have to be in front of the notary to sign virtual notaries. California's not there yet.
California's not there. I don't foresee that for a while. There's, we've streamlined down a lot of the loan documents. You can pre-sign a lot of it ahead of time. But when it's something important, it's your deed of trust, that's saying that you owe somebody money. I mean, for your own protection, you want to make sure that that's done right. With the title notaries, they're pre-vetted out, and normally they've worked with, they have a handful of different notaries, so they know that they're personable, right? It's a kind of a job that you've got to show up and be a smiley face and reassuring, but also you need to be competent, and you also need to carry a minimum amount of E&O or errors and omissions insurance. So, there is a vetting process, and for title to ensure the transaction and escrow to be comfortable to close the transaction, it is going to be a notary that is, assigned from them. And that's great. And, again, it just works in the benefit of the consumer, that when it all's said and done, here's the last thing you want. And this has happened to every lender, every escrow officer, and we all cringe. Something is missed, a notary stamp is not legible, they have to re-sign something, the county kicks it back, you missed an initial. We all want to try to mitigate those issues. It's embarrassing, it's discomforting for all of us to have to make a phone call to say, "Johnny Buyer, I'm so sorry, but do you have another 10 minutes? I'm going to have to send the notary back out there." So, again, where Diana's mentioning the experience, they want to vet these notaries to make sure that they are familiar with what they're doing.
Yeah, and it's not just the documents either. I mean, it's the signature lines, because a lot of times somebody will give us a name in the very beginning, and then when it gets to the end and you're looking at their driver's license,
Yeah.
you can't undersign.
Right.
You can oversign.
And the thing with the notary, at one point, hey, back in the day, I was a notary as well. I mean, Lendy, we could almost do it all back in the day.
Right.
With that, it was very convenient because I was already at my loan signings, And I wasn't doing it to get rich, but it was like, hey, I can just go sign my own loans. It was very convenient. I think I was more petrified of the notary laws than with the lending, of how scary it is to verify that ID and make sure they are who they are. And, it has to match up. These are legal binding documents that you're signing with the clients. And, to try to say to somebody, this license is expired, or that doesn't really look like you. I'd rather have an escrow or title assigned notary. Let them be the bad guy versus myself. So yeah, it's a tough job.
Yeah.
Yeah. With the recording, let's we've brought up recording. Recording's done with the county, and that is once something's recorded and made public record, that's when it's official. So it's not necessarily today. I funded a loan. Shout out to Sean and Laura. Congratulations. We funded a loan today, but that doesn't mean it's closed escrow. So the following day is pretty standard, where escrow will sit on our wire, the final funds, to make sure nothing's pulled back. And then the following day, it's pretty common that they will record. And once they record the grant deed and we get confirmation, that's what they say. It's positive confirmation that that everything's recorded okay, then that's when we close escrow and that person becomes legal owner. And so again, according to the purchase contract, there's closing escrow, and it may close escrow at 10 a.m., but according to the purchase contract, you may not get keys until 5 p.m. that day or the following day, so all of these terms and everything is kind of pre-thought out through in these purchase contracts. And so why are they so intense and so many pages? The more that you can kind of pre-think through, the fewer the arguments and arbitration that it needs to get to. So
all of these transactions have so many cooks in the kitchen too. So you have to make sure everybody's lined up.
And everybody's been doing it for a long time, so their way is the right way and all that. So this leads me into a great question, and I don't want any names or anything, but you have to work with a lot of agents. You have to work with a lot of lenders. And I guess let me address this before you get speaking here, is that most of the time, the customary thing is that the selling side will pick the escrow services. And they can pick escrow, and they can pick title, and they can be different cases, different companies rather. We don't choose who we work with, but as an industry, we have to be courteous, and obviously you want to work together and make smoother transaction. Share with me some of the pros, cons, maybe some horror stories. I don't know what comes to mind, because unfortunately, like, it's great when we have these great escrows, and again, to reiterate how you and I met is we had an escrow, and it was just like, I try to be on it as fast as I can, and every time I turned around, you were just firing right back at me, and it was like, wow, she's good. Like, it's, and I understand there's different levels of busy, and we're not always able to, but good customer service when you receive it. It's when you go to that restaurant and somebody just wows you. That's what I want to say about yourself is, even though it was our first time working together, it was like, Diana's good. Diana is really good. And so, I don't know, share with me what it's like to work with a vast array of people, good and bad.
Well, thank you.
Yes.
I guess, it's easier to go good. I mean, on either kind of transaction, whether it be sale, refi, all of the parties, get us as much information as possible.
Yeah.
I always say I don't have a crystal ball, and I do, but it's purple and it doesn't count. But basically, I mean, the more information you can get us up front, the cleaner the transaction's going to be ultimately. We need, on a sale transaction, we need buyer and seller contact information. We need to make sure that they are who they are.
Yeah.
I mean, there's a massive thing going on with vacant lands where people are actually selling property that isn't theirs.
Oh my goodness.
So, the more we know up front, the better we can make sure that everybody's on a clean line and everything's going good. So my favorite people, they're the ones that give me what I call a shopping list up front.
Yeah.
Tell me everything you need. The way I handle my desk directly isn't the same as everybody's. I do try to handle it the best to work with each of the clients. Mm-hmm. But I want the prelim up front. I want to see what's going on before I start sending out paperwork, before I start asking for things. So that way I'm knowledgeable when I'm talking to them and just not kind of feeding in the same information on each file. The bad ones are the ones who don't give you the information, who
Yeah.
you're constantly having to follow up every 5 minutes, and then you have loan docs and you haven't even ordered a payoff demand because you don't have any of the information yet.
Oh, wow.
So that happens more than you'd like.
Unfortunately. Yeah.
Yeah.
Yeah. And I think what's good here, and again, we're not trying to pick on anybody, is, do some vetting of yourself, prospective clients out there of, if you're looking to purchase a home, read those reviews, Yelp, talk to friends, talk to people that, who's worked with them before, because that means a lot. And, I have this other saying, you're also as good as your last deal. You can have 10 great transactions and one very challenging transaction. And at some point in our careers, we're all going to have a challenging transaction. I mean, you'd be a straight up liar, Pinocchio here, if you can't say you're going to have that one that, for whatever reason, things maybe in your control and you slipped up, maybe beyond your control. And, I've had people buying vehicles midway through the transaction that you don't find out until it's time for you're clear to close or funding. I mean, whatever that reason may be, it's how you respond to it. And I've found that there's a lot of tough conversations I've had to have in this industry. The biggest thing that comes to mind and what I'm hearing through Diana is communication. The more that we can communicate with one another, the buyer a lot of times just thinks it's my lender and my realtor. Well, there's another realtor that's working with the seller. There's the seller. There's escrow. There's title. There's assistants throughout all of this. There's TCs that work throughout all of this. Those are transaction coordinators. Sorry for the acronym. There is teams of people that are working on your transaction to get you to close. And again, the more that we can communicate openly with one another and work together without having our, attitudes come of, I already knew this or I didn't know that, it's just put all of that to the side and let's look at what's the best interest for the client. The more that we can talk about it, make sure that we're prepared. So it's not a last minute of ordering the payoff demand. It's not the last minute of ordering the SI and finding out that there's liens. And now we have to wait for the IRS to come back with demands. It's working together, working proactively. And again, that's what I saw instantly with working with Diana is, how proactive that she was and how smooth and easy that transaction went. That's how I saw it on my side. So again, it was one of those that when I knew I wanted to have escrow, I really don't know. I mean, I think we spoke a few times on the phone. I know we have a whole slew of emails that we've exchanged back and forth, but this today is really good opportunity for me to sit down with Diana and get to know her a little bit better, and for her to educate us with her 25 years of experience of what the escrow process is all about. And hopefully you're hearing that it's not just she's clicking a few buttons and punching a few things. She's got to work really hard to, again, make sure that, when the notary gets there, everything is prepared as expected. All the forms are there. The notary is, doesn't miss any signatures so that we can close on time. Maybe we can close early. Who knows?
Yeah, because if you miss stuff, one of my first sale escrows was with the local 55 and over community.
Okay.
Got everything done, read the payoff demand and all the park rules, etc. Get ready to close. We closed late at night. Didn't realize that the borrower wouldn't actually get the keys to the house until I had handed the check to this particular community.
Goodness.
It was a Friday night.
Oh my goodness.
I had some very, very upset people on Monday, so I learned the hard way.
Yeah.
You read that fine print like there's no tomorrow.
Yeah.
And
all of that is in writing, and it was unfortunately her. And thank you for sharing that. Doesn't matter how long you've been doing it. We all, and I think that's what I enjoy about mortgages. Guidelines are constantly changing. No two transactions are the same, and I can't say that enough. I don't care if you have a 750 score. If every one of my clients forever in my future has a 750 score, please do, by the way, it's still, what's the loan to value? What's the program? There's a lot more, that contributes to how the overall flow of everything goes.
Yeah, the steps are the same. It's just whatever different hurdles get thrown our way.
Okay, let's talk challenging things. What do you think about this market?
I think it's challenging. I think everybody's vying for the same piece of pie right now, and that's kind
Yeah.
of difficult, you know.
Yeah. I think, I'm going to talk from a lender standpoint here, and then, a few points that I see, and I kind of want to bring up and see your take on this is, who would have ever saw COVID coming, and the result of COVID would be, unprecedented. Hate that word, but it's working. Extremely low rates that created a real estate movement that was monumental. And overnight things just blew up. And, it with extremely low interest rates, it increases the demand. It increases the qualifying pool of potential buyers. And, is that healthy? It's not. Long term, it's truly not. And I want people to really understand that, historically, interest rates in the 6s and 7s is normal. You need to kind of feel that interest a little bit. If not, it devalues the purchase price, and that devaluation is called inflation, that it starts to rise. So what was $500,000 at 3% interest, 100,000 people could qualify for that, and it created a shark feeding frenzy that now that $500,000 home is selling for $550,000 or $600,000. That's not healthy. And I'm not saying that you can never have competition, because I feel competition is good, especially with lenders. It helps to regulate and keep your prices and fees very manageable for you. But when people are willing and being asked to remove loan contingencies, appraisal contingencies on your offers, it's not protecting you in the purchase transaction. And so I think what is normal is, to have, 5, 6, maybe 8 different offers that the seller has to choose from. And that seems reasonable, and let them make their pros and cons of, who they want to go with. It's not always the highest price. It could be that heartfelt family letter. I've seen that many times where, the veteran that's buying his first home with his family, where they get chosen because somebody wants their departing residents to go to, a good home. There's other investors that, it is about money. And, sometimes, yes, they will go with that lower cash offer because they can close in 3 days, whatever that reason may be. Now, where we've at is, we went from under 3% on a 30-year fixed, which I don't know that I ever would have expected it to get there. And, as of today, we're at 6.5 on a 30-year fixed. And, it's definitely pulled the emergency brake on the desire, that demand for purchases. Now, when I look at this and I just look at the economy, I still feel that we're healthy. And, it's kind of put the buyer back in the front row of position, that they do have some options of what they're doing. There's not as much fierce competition. But yet here, and I'm going to speak in my local market, Ventura, that the problem that we have is we have a lack of inventory. And people that did have a 3% interest rate, they're now saying, okay, I can make a lot of money by selling my home, but now I'm going to have to pay this higher interest rate on my next home. Do we really want to sell? And that's kind of the fear of the unknown. And with that, I know that there's been a lot of forecast, but here's what information we do have and what is imminent. All of the factors and the way that you read and indicate that you're in a recession is unfortunately not until you're truly in it, and you're in it so far that you can look back and say the downward of these last few quarters, year over year, the GDP, the inflationary rates, all of these economic factors, we're just checking box after box as we truck along with the current interest rates to know that it's a matter of time. The Fed, the Federal Reserve, unfortunately, as politicians that are advised by these, economic teams, are not doing the greatest job of actually being proactive in reading data. They're looking at, okay, we've got inflation and it's still reading high. Let's raise the rates. Now let's pause for a minute here. most consumers come to me and they say, "Oh, I heard they raised rates yesterday." And I go, "Yes. However, the rate that they raised is not a direct correlation with my mortgage interest rate. Not to say that there's not the ripple effect, but they're raising the overnight rate. So what is the spending? Banks lend money from other banks. They lend money from the government, your credit cards, short-term like equity lines, things like that. Those do have a direct correlation. But when that rate goes up a quarter, you'll feel it, but it may take a few cycles. And so when they're reading this data that says 30 days in, oh, we raised the rate and that didn't do much, are they really looking and understanding that it takes time for somebody to get their first increase and then their second increase to go, oh no, I need to change my spending. Something's gone up. This has kind of gotten a little deep here. And where I'm ultimately saying is there's a lag time that the Fed is not really honored and understood for them to get to where they want in their desired readings. And so they have cranked the throttle on increasing the rates. And I'd say we're pretty much at peak. If there's going to be a rate increase, I think it may be one more max, but I feel that we're nearing peak levels. If you look at the unemployment rates and the job starts and the hours worked, before they look at unemployment, they look at how many hours are people working. And that's what the first step is before you lay people off, is you go from full-time to part-time. Are they working 35 hours or now they're working 23 hours? We look at that data. And so with getting kind of a windy explanation here, I always feel it's good to really explain to the consumers what goes into the interest rates. And there's a lot. There's not just one thing. The one indicator, if you want to look at one, is the 10-year treasury. But that's only one indicator. We also look at the rate hikes. We look at unemployment. We look at the inflationary readings. We look at all of that. And so with bad news, unfortunately, comes good news. And so where I was going is that there's a recession, whether we're in it or starting to, there's a recession coming, and that's going to bring down the interest rates. So those listening, hey, high five to you, stick with us. The rates are going to be coming down. Now, the opportunity is right now, because the minute we get these lower rates, and I can tell you, I'll raise my right hand. I do not, with all my knowledge, believe rates are going to be at 3%. So what is a reasonable number? Hey, let's get down in the fives. Let's get in the high fours. That would be amazing to get in the high fours. But that's just enough, or game-changing enough, to motivate and move a lot of people. But take a step back and look at the cycle, right? So if we lower the interest rates, now we're getting more opportunity, more people that can qualify. We're creating more demand, and now we're creating or perpetuating this cycle. So if you ask me, when's the time to buy? Absolutely, right now is the time to buy. It's the least amount of competition. Thankfully, we're still doing well. We're still closing loans. We're very thankful for all of our clients, for every loan that we do. It is not without much appreciation that you entrust in us. But we work hard for it, and we want to show you that, you're a client for life, and, the cost of retention that we put back into this, because we're here for the long term. I just want you to know that. So when is the time to buy? Right now is the time to buy. The littler of the competition that you have. And then 6 months from now, when rates start to dwindle down, if we can save you $200 in your monthly payment, we would love to be able to take that opportunity. But the sooner you buy your home, the more you make, and that's an appreciation. But not only an appreciation, you're acquiring an asset that increases in value. You also have an opportunity to make more payments, and that's the amortization, where each payment that you make, you owe less and less on your home. And so you create this equity, and you're creating your wealth. And they call it the cost of waiting. If you waited 6 months, it may cost you, $30,000 in equity plus $5,000 in amortization. you truly have lost money, even though the rates may be lower 6 months from now. So in good faith, and these are those personal phone calls. If you're sitting on the fence, you're not sure if you want to buy, reach out to us. We have some programs that if you're buying now, when it's time to refinance, we heavily discount and waive certain fees, and I can give you more of the specifics of that. So I just kind of went off on a little tangent because I'm excited that now is the best time to buy. And I want you guys to understand that if you're waiting for a bubble or you're just hoping that you're going to see 3% again, maybe buying a home's not for you because you're not listening to the professionals of where the market is. Now, with this, and this is what I'm going to say is, rates have gone up. Lenders, we couldn't hire fast enough underwriters and loan originators. Escrow is the same way. We all work in this real estate business where, a lot of the refinances, unless there's a special reason, you're not refinancing as much anymore, right? It doesn't make financial sense unless there's a special purpose to buy somebody out or to reinvest it somewhere that you could make greater return on your investment. So business is slower, and that's not, I'm stating the obvious here, but what I've seen is, and you tell me, it's a good cleansing for the market because, you get kind of stacked up when times are well. Anybody and everybody that has no experience jumps in and thinks that it's easy, but they're also kind of taking business away from us in a nice way, us industry veterans that are here through and through. You also have some of these, money changes people, and you have some greedy people. You have some, I'm going to call it, what I just heard at our most recent sales meeting from our corporate office is that fraud is on the rise, right?
Yes.
When people are desperate that they've only got one loan, they're willing to close it at all costs. And so I think this is where I was going, Diana. What are you seeing? Are you seeing the fraud in your business and that kind of stuff?
Yeah, there's a bunch of, there's always fraud in this business, but it's, every time I turn around, they're getting sneakier and do different things. We have, like, say, wire fraud is always a huge thing. So
Yes.
make sure that you always call and verify wire instructions before you ever send money to an escrow company, titling company, because unfortunately there are people out there who hack emails and change things around, so you're sending it to their account and not the right one. That's the main one.
Yeah, and no matter how many times I've heard that, it's still happening. So be conscientious, ask questions. If you get a suspicious email, if you get an email, call and verify it. It takes 30 seconds to verify wiring instructions before you've just, wired $200,000 to the Congo and change somebody's life out there.
Like I say, the one that we are, like, our legal department really has us on the lookout for right now, like I said, is vacant lands or non-owner occupied.
Okay.
Because people are acting like they're the sellers. They're signing the documents. They're signing with a notary on a foreign notary.
Yeah.
So, we don't even have foreign notaries. We don't really have a say in it because it gets done at the American consulate. So it's not like we can say, oh, yeah, that one's approved by Stewart Title. It's the American consulate. But they're signing on the documents there and then closing. And then one of the stories that I heard recently was that the person sells, and one of the neighbors is like, hey, why are you taking all your trees? And the guy comes to, I didn't sell my property. And these people had destroyed all of his land, like took all the fruit trees and such off of it. So now we're trying to find workarounds to make sure that we can verify that the person is actually the seller, which again is another reason you want to make sure that your paperwork has a forwarding address.
Yeah.
Because they can use that as a way to contact the real seller.
Yeah.
So that's another one. I don't know if it's fraud so much, but one of the other new things that we're seeing is they're calling them, well, the article I read is called zombie loans.
I have not heard this.
So they're taking, back in like 07, 08, when people were having to modify and
Yeah, the foreclosure crisis.
basically they were taking out the second to kind of push their loan payment back, and so we go into a second with Kalhofer or whoever, but then individual investors would buy those loans. Well, from what we're hearing, they've been sitting on them for 20 years, never asking for payment on them, And now that the market's good and the value of that property has gone up, now they're trying to foreclose on them.
Interesting.
So that's, like I say, I don't know if it's fraud necessarily.
Yeah.
It seems a little shady, but
Yeah.
that's just my personal moral on that one.
Yeah. Yeah, we had one. We did not do the fraud. We were defrauded as a lender. One that I had done a loan on with a client, and another lender had decided to do fraud with somebody else, and they stole a notary book and they reconveyed our deed of trust. So imagine a nice house, and they go and record a fraudulent reconveyance that says that there's no longer any money that's owed, and then they go and do a new cash out refinance. So some of the, as you're saying, not just investor loans, but also, if something's paid off, that's also a red flag for a lot of lenders that they want to make sure and do their diligence. But I mean, I don't see their plan of how they weren't going to get caught, and they did, thankfully. But it's just like, it disgusts me. It gives us lenders a bad name, and I wish there was no. So the moral of the story, I don't want to end this on a positive or on a negative note, is we're seeing more and more suspect things as time gets tough. With time, this is more and more reason to vet the professionals that you want to do business with, whether it's escrow, lender. I'm always here. You can call me, references. The same thing with Diana. Call escrow as you're getting into a purchase contract. It's one of those, pick up the phone and ask her questions, get to know her, and make sure that, hey, I want to do business with you. How are we going to work together? And if this is your first time buying a house, it's not a bad phone call to make to understand how escrow works, synonymous with the loan portion of it, and how we all work together. And so,
we love first-time home buyers.
Yeah. So without further ado, Diana, do you have any kind of final thoughts or anything?
Not really. Just good luck to everybody.
Yeah. Where can we find you? I mean, if they do have questions, if they want to do a refinance or do an escrow with you, maybe it is on that timeshare, maybe it's on that $4 million commercial property. How can they get a hold of you?
You can contact me at Stewart Title in Ventura. Phone number is 805-367-5625. We also have a website, stewart.com. You can email me directly at diana.wyatt@stewart.com. Pretty quick to get back to everybody, at least I try to. If it's an actual emergency, just keep calling, and like I say, either if I can't help and I don't have the answers, we'll find it for you. So but we've seen quite a lot.
Thank you for your time today. And Diana, I want to close with a happy thought. And the happy thought is, again, I just got to know you. And one of the things that you passed on, or our early conversations that we had before we recorded, was a topic about tequila. So do you want to share that tequila that you love?
Villa One, Tequila Reposado. It's the best tequila out there.
There it is. She says it's smooth, tasty, and
tastes like bourbon afterwards.
Oh my goodness. We're going to have to wait till Friday to get started on that. But hey, thank you again. We just put out a mass email to all my clients, and I've gotten in the last day or so much feedback. Thank you guys for reaching out to me, texting me. I've gotten emails showing me the love. It was very nerve-wracking to get started on this. I hate the sound of my voice. It's my own voice, and it's just, it's
a radio voice.
It's self-esteem. But at a certain point, I committed that no matter what, whether I fail, whether I do amazing, and I take out Joe Rogan, mad props to my boy Joe. I was committed to passing along the information for consumers to really understand it. I have friends that have bought in 10 homes, more than that have done this process several times, and they're saying, Greg, we are still learning valuable information. My last podcast was about credit. And that was, rather than an interview, is just kind of passing along information. And I know that it's tough, especially just hearing it, verbally without seeing. And we do have YouTube that we post all of these, and we do have videos. So if you want to look in on us, you can. That's one that the information, if you could just retain one or two little things, there's no test at the end of it. But at the end of the day, I'm giving you tools and resources that nobody's taught you, that in school they don't even teach you this stuff. but that everybody should know. And so, the takeaway here is I appreciate you listening. I promise I'm going to bring you value each time. And without further ado, thank you again for listening in. G Money, Real Talk with everything mortgages and real estate. Until next time, my friends.